This is really quite interesting here in gold. Zoom in. Now, we are in an intermediate term corrective period on this intermediate term cycle. This low is due 814 to 10.9. That's this sell-off that we are still in, okay? We have a zone here from around 1909 to 1850. That's likely where this ends up holding here, but we are not likely done on the downside quite yet. But let me show you what's going on here in the short term, because it is quite relevant. There's a low that is due around now, 621 to 630. Good odds that we get a couple of week bounce here on the upside that still only forms a lower high and then turns down once again, as this low in gold is due around mid-August. And that would be inside of what's going on here on the weekly timing as well. Okay, so it is likely that we form a low around then, and then it would favor a move back to the upside once the weekly and daily both turn up. So if you're a short-term trader, we'll be watching for this to form its low and give a multi-week pop. And after that, look for a short side setup once again for a move back down. That's really what looks like the highest odds at this point here in the gold market. You can see we are just holding on to that 61.8 fib right there at 1917. And we'll have to see if we can turn neutral on what has been a falling trend ever since right here on 518 around the $2,000 area. So almost 100 points down here in gold, all in the context of a falling trend. Okay, so that's why it's really helpful to use the trend to help you to set your bias and then watch for changes in trend to tell you when you're in either rising phases or corrective phases.